Hello everyone, this is Evan here from the Trade Risk on Wednesday, July 6th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some of those popular individual names. Now, before we get into things, I want to remind everyone, if you haven't yet subscribed to our YouTube channel, please do so. Bottom right-hand corner keeps you up to date with all of the latest videos that we publish. Also keeps you up to date. Yesterday, I did a live stream YouTube broadcast, and it keeps you up to date with those more spur-of-the-moment broadcasts that I'm looking to do a little more regularly, a little more interactive format, ask some questions. I got some good feedback from it yesterday, and I'm looking to do more of those in the future. So do check out and do subscribe to this channel in YouTube and stay up to date with the latest that we put out. So let's jump into markets now. S&P 500 closed up 60 basis points on the day. Nice constructive day, dip buy from the bulls, and this almost engulfed, basically did engulf yesterday's session. Now remember, it was a holiday shortened week, so Tuesday was the start of the week. That was yesterday, and that was this candle right here. We closed down about 70 basis points yesterday, and we recovered all of that today. So this is sort of the outlook right now. We're still in this range. I'm using about 203.50 to about 210 or so. And remember, this trend line, if we go to the weekly chart, is the trend line that extends from the all-time highs in 2015 in the S&P 500. So a very significant high stakes level that we continue to trade on. And there's basically just a magnet here, right? You can see we tried to break above it a couple of times. We failed. We came back below it. Then the dip buyers brought us back to it. So we're just hugging this line right now, and we're still in this wait and see mode as consolidation gets tighter and tighter and more supply gets kind of built up around these levels. So this is still, and we're right on the cusp of it, this is still the area that I'm watching very closely. I still remain constructive on this market. We really need to get above 210.50, hold that level, 210, 211, get above those two nice round spine levels, and if we can stay consistently closing above them for a couple of days, then I think we can get that motion, put us in motion to take out the previous all-time highs and start trending higher in the S&P 500. That's certainly the bull case. The breadth recently has been supporting it. Advanced decline line cumulative at new highs. We're seeing a lot of new 52-week highs starting to come into play here. So there's a lot of under the hood kind of constructive things that are going on in the markets right now, and we're going to see if those things can offset the traditionally and historically volatile summer months and you know, get us to those new highs, start us to break us out from this range. But for now, we can remain constructive, especially with this nice little, I'm going to call it a bullish engulfing day. You know, maybe this leads to further gains here for the rest of the week. It would be great, again, as I mentioned, to get above 210 tomorrow to see that follow through. Otherwise, we're still range bound. You can see the 8 and 20 though are starting to curl over, so these fast moving averages, you can see MACD at the bottom starting to curl back over to positive. That's constructive. Hopefully start to see that momentum continue to build. That's what's going to help us break out in the near term, if that does happen. If not, again, range bound behavior is what we still technically are in. IWM, let's go there next. You can see very clearly in a range, a very clear range, a very wide range, right? And I talked about this a little bit in the broadcast I did yesterday. If these markets do want to stubbornly kind of stay range bound, we do have these big, wide, comfortable ranges to trade in that we could, just develop in and build out for the next couple of weeks, and that potentially would frustrate the majority. So as much as I would maybe like to see a bullish breakout because I like momentum, we may not get it. We may just stay range bound. We may just chop around and kind of frustrate the majority. So keep that in the back of your mind. But you can see IWM had a nice day today, closed up 18 basis points, had a nice day relative to the lows of the day. You can see dip buyers did step in and close us on the highs, but now we do want to see follow through. You get this little trend line coming down here from the June highs, so keep that in mind. The Qs, similar kind of holding pattern here. We had that false breakdown a couple weeks ago, put us back into the range. Still have ways to go to get to the top end of it. Around 110 or so is where we sort of rolled over both times in April and June. So if we can get back up there, those will be important levels to look against, about that 110, 111 area in the NASDAQ 100. So that's sort of the look at the way I'm looking at the markets right now. Neutral with a bullish bias, just given a few of the things we discussed earlier. That's the way we're certainly positioned. We added a little more exposure today, given it was a good, solid close day, but still waiting to see for the ultimate breakout to really get aggressive on the long side. Now, if we look at some other markets, TLT, this is a market that's aggressive as it continues to make new all-time highs here, have a series of gaps over the past couple of weeks, and this continues to extend. If you overlay Bollinger Bands on here, you're going to see yesterday we had a full-bodied session day outside of the Bollinger Band. I suspect today is pretty much the same. Maybe they're catching up a little bit. You can see momentum, though, stretching to highs here. I know a lot of people want to fight this, and certainly for for justified reasons, I suppose, when you look at those Bollinger Bands and some of the parabolic moves that TLT is experiencing right now. But being a momentum trader myself, you always want to be careful. Wait for your signal, and of course, it's going to come down to your individual strategy, but I still don't see a reason to really short this, but that's just my style. A weekly chart, I believe this is also outside of the Bollinger Band, so yes, certainly extended, but that the strongest trends are usually at the beginning of developing trends and at the end of them, and if this is some type of blow-off ending sort of moment in this trend, who knows, this could squeeze to 145, 146, in just another day or two before all things, eventually, roll back over. So again, all speculation, really strong strength here. I couldn't get behind buying this, couldn't get behind shorting this right now. If you're not involved in it, it's just something that's interesting to watch. Gold also extending its move higher. This one's still coming out of a more concrete kind of base here. I like this one a little bit more. It is still certainly stretched, but more justified in my opinion. It did go through a nice period of consolidation for about 3 or 4 months recently, and it's just legging higher here on the weekly time frame after breaking out from this channel. Very healthy long-term structural action here. Short-term, maybe it's overextended, but intermediate term, longer term, gold looks pretty good here. Silver, very similar situation, gone parabolic a bit recently, broke out from this nice inverted head and shoulders pattern just a few days ago, really last week, and this continues to look good. It's extending higher. It's the position that I own in my long-term account. Writing some calls against this position, so I might get called away on this one, but it's been a nice run in silver. I like it. Similar comments to gold, right? Long-term structurally looks great. Short-term probably overextended. USO, this one took a beating yesterday, but it did start to recover today. It didn't just completely roll over, which is constructive. It's trying to hold on to these $11 USO lows, but you can see it is really, it's falling out from this rising wedge that it was in. A weekly chart really paints the clear picture here. You can see a much clearer wedge pattern. Even the monthly chart, you can see how ugly this really looks when you take in context of the long-term downtrend that it's been in. So just keep in mind right now it looks like it's comfortable just chopping around, but just be aware of sort of the forces at work there. The 8 and 20 did curl over, MACD heading negative, so got to be careful there in USO, but that's sort of the way I'd suggest a little caution there. Now let's look at some of the sectors here. XLU been on fire. This one continues to extend higher here. This is one that we're still in. We got involved in this back here on Monday, or actually was it Tuesday? It was one of these 2 days on this breakout here, and this continues to work for us. We're still in it. Yes, it's stretched. Probably needs some mean reversion, but until I get a reason to sell this, I'm going to continue to try and pull out some more profits in it. Maybe tomorrow, if it has a nice kind of nice extension higher, nice ramp higher, I'd probably be exiting the rest of this position. So XLU has been a nice winner. This is where the chase has been. I'm going to continue to stick with it. XLP also breaking to new all-time highs recently, and this is also holding up pretty well today. Still, you can see it's basing out a little bit over the past few days, developing maybe a little bit of a range here, but still very healthy trending action. And healthcare breaking out today, real constructive breakout actually coming out above almost a year-long range since going all the way back to mid-2015. This $72 level has been the top on the healthcare sector ETF, and you can see that's getting challenged right now. So keep an eye on that for continued strength. Would be an interesting one. On the downside, lagging utilities, financials still are just a mess. You can see it's just really in a messy pattern. Weekly time frame smooths it out a little bit, but you can see 8 and 20 curling back lower on the weekly time frame. We're making lower highs, and we're in the process of maybe not making lower lows, but still just generally a mess, so you got to be careful there. IYT also transports are kind of a mess as well. You can see similar pattern here in a long-term downtrend, and it looks like it's maybe not making lower lows now on the long-term basis, but maybe just developing into a messy sideways range. So just be aware of that for certainly the two lagging sectors there. Now looking at some individual names, let's start with Amazon. This is making new all-time highs today. You can see clearing back above the old June highs of about 730 or so. So we had new closing highs 737, 1.31% up day. This is one that we actually established a position in today. Members took a position in this earlier today. So we are long Amazon, looking for a breakout, like the breakout to new all-time highs here. We're going to see if this can continue to work for us. And again, if this is something, if you're a swing trader, if you're a momentum trader, you definitely have to check us out, because, and this is going to go into a bit of a plug here, but if the market really does decide to break out, these momentum trades, these breakout trades, it's going to be a good strategy to have in your tool belt. That's something that we do every day, is trade breakouts and momentum. So that's why I'm so excited to see if this market will break out, because that is our environment. So I encourage you guys to check us out if you're interested in swing trading, momentum, breakouts, all that good stuff. Make about one trade per day on a closing basis. So check us out for some of those trade alerts. Top right hand corner, you can click that link to read more about what we do. But that's a position that we own right now. We're going to continue to see if it can move in our favor, trail the stop accordingly, and exit if we don't see that momentum continue. Another name that I want to talk about, Facebook, also had a nice strong surge today, 2.38% move to the upside today. Real convincing, getting back above that 116 level, finally starting to see a little energy in Facebook. It's been very lethargic here over the past few weeks, came back down, filled the gap. Perhaps that was its intentions, and now it's kind of heading back higher here. Still has some work to do, right? If you look on the weekly time frame, you still have a couple of points before these all-time highs, but keep it on your watch. If this is a good short-term pivot low to trade against, this 110 area or 108 area, you could use that, consider that as some type of way to manage your risk. Twitter also, this has been shaping up recently over the past couple of weeks. We've watched this trend kind of develop. We've had a few trades in here ourselves. Continues to look good. Not a lot of energy today, but it's just grinding itself higher. 8 and 20, still working itself higher. It looks like there's a lot of supply when looking immediately left here in between the 16 and 17 and a half, 18 level. I suspect if it can start to clear above 18, 1790, these upper 17 levels, that's when you could really see a more quick, a more powerful sort of squeeze come into this name. But until then, let's just see if this can continue to work. We have no position in here, but Twitter does look good. Alibaba, we've talked about this one for a while now. You can see weekly time frame bumping up against this trend line right here. Got to stay above 80, get above 80, stay above 80. That's what's going to start really shaping Alibaba up to the upside. And then finally, Tesla. This one's been in the news for a host of different reasons over the past couple of weeks. It's really just in no man's land right now. Tesla, to me, just looks like a headache. There's probably a lot of intraday opportunities in this, just given the headline kind of driven news that it's been hitting the stock. But as far as a swing trading standpoint, this just looks like a lot of headaches to me. I don't see anything clear cut to really work with here. You definitely had a pivot low maybe to work with around this 180 level, but to own it here against 180, I don't necessarily know that that's some high probability trade. Weekly time frame, you can see the 180 level is more or less where long-term support is in the stock, 180 to 190. So if you're trying to hold it on a longer term basis, that's a good place to manage risk. False breakdown here early in 2016. So that's sort of the read on Tesla. I've had a lot of questions on that recently. And I think that's it. We'll just end it there with Tesla. So I hope you guys enjoyed the video. Remember, if you haven't subscribed, do check out that bottom right-hand corner. Please hit subscribe on the YouTube channel. Otherwise, I will catch you guys next time. Thanks for watching.